Okay, good morning everyone. You're very welcome to today's webinar. We've just completed a sound check there 5 minutes ago with people who logged on early, so we know there's no issue with the sound, thankfully. So let's get started. So today's webinar is what you need to know about PAYE Modernisation. The webinar is accredited, if anybody is an accountant that's listening today. We're going to have a Q&A session at the very end. So on your control panel there on the right hand side you'll have a question tab. So throughout the webinar, if you do have any questions, please type them in to your question bar and we'll try to get through as many questions as possible. Today's webinar is being recorded and we will email you a copy of the recording in a few days' time. So we've designed today's webinar to give you an understanding of how PAYE Modernisation will affect your business and what impact it will have on running your business. PAYE Modernisation will involve the most significant reform of the PAYE system since its introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure that the right tax is being deducted. So we have 3 speakers today. Our first speaker is Paul Byrne, who is our main speaker. Paul is the Managing Director here at Thesaurus Software. After qualifying as a Chartered Accountant, Paul went on to set up and manage his own accounting practice where he dealt with a lot of payroll clients firsthand. Paul co-founded Thesaurus Software in 1991, so a long time ago,
yes, indeed.
with the goal of providing payroll software to Irish businesses. So we now provide software products and excellent customer service to over 100,000 businesses across the UK and Ireland. So welcome, Paul. We will also be joined for the Q&A session by Sandra Clarke, who is the partner at BCC Accountants and a council member of the Irish Tax Institute. So Sandra, will join us for the Q&A session, where again, Sandra is on the front line dealing with a lot of payroll clients. Next up, I'm delighted to welcome Sinead Sweeney, who is the PAYE Modernisation Change Manager for the Revenue Commissioners. So Sinead is very much on the front line when it comes to PAYE Modernisation and will also deliver a presentation today. So here is the webinar agenda for today. So you can see we have quite a lot to get through and our Q&A session will probably go on for as long as we can. If we don't get to all of the questions, which is highly likely, we will get back to people on an individual basis. So part 1 is Paul's presentation, what you need to know about PAYE Modernisation, and then we will have Sinead who will go through the revenues presentation, and then we'll have a Q&A session. So I'll now pass it over to the lovely Paul Byrne. So thanks, Paul. Take it away.
Thank you very much for that, Karen. What is PAYE Modernisation? Also called RealTime Reporting. It's probably the biggest overhaul of the PAYE system since PAYE was introduced back in 1960. Which happens to be the year before I was born. Currently, lots of employers are being given the wrong tax credits and cut-off points, and this is because revenue only gets payroll data once a year in the form of the P35. So receiving the data in real time will ensure that revenue can allocate the correct credits and cut-offs, thereby avoiding over and underpayments of tax. So revenue will know where the taxpayer is working and how much they are earning. Many employers are not operating PAYE correctly in that they don't register new employees or they use out-of-date tax credits. And this is also being addressed by PAYE Modernisation. So essentially a file, much like the P35, will be submitted electronically to revenue on or before each pay run. In most cases, this means a file is submitted either weekly or monthly. Also, the retrieval of tax credits, in other words the P2Cs, will be automated which should ensure that the correct credits are being applied by employers. Employees will also have their own online portal with revenue through which they can tell revenue about changes in their employment, in other words departures and commencements. And through this portal they will also be able to allocate credits across multiple employments if they choose to do so. At any stage, employees through the revenue login can view what data their employees have submitted in respect of them. They won't quite see pay slips, but they will see a version of pay slips, a statutory pay and deduction statement, so to speak. Revenue will not have sufficient information from their real-time feed to display a proper pay slip. For example, they won't have any of the non-statutory deductions such as union dues, staff loan repayments, etc. At the end of a tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their portal. This means that P60s will no longer be required. The files being submitted each pay run will have details of employees commencing and employees leaving. This will mean that P45s and P46s are no longer required to be completed by the employer. As revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. In addition, this periodic file will eliminate the need for P30s, so effectively all the P forms are going. So APIs. API stands for Application Programming Interface. An API enables different software applications to communicate with each other. In our case, it allows our payroll software to directly interact with revenue systems. So this all happens under the hood and usually results in a much better user experience. For example, look at how tax credits or P2Cs are retrieved at present. You log into your ROS account, you go to the Revenue Record tab, you then select P2C details, you then search the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software you go to the relevant P2C import section. You need to select the correct file from the correct location and then import. By my count, there are at least 9 steps involved in that process. With an API, it should just be one click to achieve all of this. Similarly, with the periodic payroll submission, which contains information similar to the annual P35, the actual transfer of this data to revenue will also be a one-click process. Now, I should say the click count may be somewhat higher, as probably in our software we'll probably need to include some "are you sure" dialogues just in case. Because of the APIs for P2C retrievals and file submissions, the actual work required each pay period should be less than it is at present. I mean, look, take a typical pay period. The sequence of events will be as follows. Firstly, you enter details of new employees into the payroll. Next, you enter the pay hours and deductions for all employees. Then you retrieve the latest P2C information, which is a one-click process on the new system. Then you process and finalize the payroll. Then you submit the file to revenue, which is a one-click process. And then you distribute the pay slips and pay the employees. One thing I should mention here is that we as software developers are pushing for a revenue system that will respond to all of these API calls in a matter of seconds. And I know they are hoping to achieve the same. Obviously the response times for large submissions, say with 1,000 or more employees, may well take a minute or two. It should be noted that the one-click processes will use the employer's or agent's digital certificate, and this cert will need to have been installed on the computer. If the user can log into ROS on the computer, then it has the cert installed. For those computers without a digital cert installed, Revenue may consider making use of a technology called OAuth. And OAuth is an interesting one. Say your accountant wants to access your payroll records online through ROS, but they don't have an agent certificate covering you. You may be able to basically approve a token where they can actually log in temporarily into your account. It'll be interesting to see whether this is actually rolled out by Revenue. There are various other parts of the API process that are not covered in this webinar. For example, there'll be different ways of checking submissions already made, and these will be used by the software to present information back to you. So the timetables in the run-up to launch. Going back a bit, the last Minister for Finance, Michael Noonan, announced the launch of Revenue's public consultation process regarding the modernisation of the PAYE system in its budget statement in October 2016. Planning on this project by Revenue started last year, and they have already allocated substantial resources to it. In a nutshell, the plan was to have file specifications agreed by June 2017. The file specifications for the P2C request, which is now called the RPN, which stands for Revenue Payroll Notification, and also the Payroll Submission request, being the periodic data submission, were both published on the 30th of June 2017, so they were cutting a little bit close there. This was after a period of consultation with payroll software developers through its representative body, the PSDA, and other stakeholders, for example, Chartered Accountants Ireland and the Irish Tax Institute and so on. As software developers, our main aim was to ensure that A, only items contained within payroll software was being looked for in the submissions, and that B, any other structural issues such as identifying multiple employments with the same employer were workable. And in fairness, Revenue have listened to us and they've took our suggestions on board, and the resulting file specifications are, in my opinion, reasonable and workable. The next deadline for Revenue is for the provision of a test environment which Revenue plan to have in place by the end of March 2018. This will allow software developers to test file submissions and responses in real time. It's also a good opportunity for Revenue to test their own systems. And hopefully this will provide plenty of time for the testing and tweaking in the run-up to the go-live date, which is the 1st of January 2019. As developers, we have to ensure that the APIs and file creation routines are finished by early October 2018, in time for the 2019 budget changes, which will be announced in October 2018. We will need most of October and November 2018 to program and test the budget changes, so release date for the 2019 software should be early to mid 2018. One other thing to bear in mind regarding timeframes is that the 2018 P35s will still need to be submitted by mid-February 2019. Effectively, this means that the old and new systems overlap at the start of 2019, and I know this will mean greater customer support volumes in that period for us. A lot of what is included in the file specifications you don't really need to know about. It will all happen in the background. Our software will allow you to view, in human readable format, the contents of the file before you hit the submit button, if you so wish. It will also allow you to view historic submissions, which you will access through the submission logs. So don't worry, everything will be open and transparent on our end. The full file specifications are included in the links on screen, and we will also include them in the handout section on your control panel if you wish to download them. The first one is the RPN, which, as I say, stands for Revenue Payroll Notification, and this is used to retrieve tax credits and cut-off points for new and existing employees. The next specification is for the PSR, which is a payroll submission request, and this is used to submit payroll data to Revenue each pay period. And as I said before, this is very much like a mini P35. You can read these at your leisure, although I wouldn't exactly describe it as a leisure activity. What I want to cover here are the headline items that are either included or left out. So first of all, looking at the data items, the RPN data items. The first of these is illness benefit, and this was one of the big headline items during the consultation process with Revenue and DSP. It was initially the suggestion was initially made that details of illness benefit would be returned with the tax credit information. And this would have been a major improvement on the present position, where the employer often has to guess the illness benefit amount that they need to process to the payroll in order to correctly tax the benefit. It turns out that no details of illness benefit will be included in the revenue payroll notification, and this is due to data protection concerns on the part of DSP. Instead, the tax credits and cut-off points will be adjusted by revenue for any taxable illness benefit. And this means that payroll operators will no longer need to worry about taxing illness benefit. The only downside of this is that many company sick pay schemes require details of the amounts being paid by DSP. These details will now only be available from the employees themselves, which may or may not be sufficient proof for the relevant schemes. Accordingly, employers may need to review their staff handbooks and policies for this new regime. Employees will be able to log on to their My Welfare account and get printouts of illness benefit received. So this might also be an option for those sick pay schemes. And very importantly, the change in the treatment of illness benefit will actually apply from the 1st of January 2018. So it is not waiting for the start of PAYE Modernisation. Employment ID, and again this was another headline item that took up a lot of the consultation and is possibly not relevant to the majority of employees. The minority that it does affect are A, those employees who have multiple employments with the same employer, and B, those employees who cease with an employer and then are re-employed by the same employer in the same tax year. The purpose of the employment ID is to distinguish these employments from each other so as to ensure that the employee's tax credits and cut-offs are allocated correctly. One of the problems at the moment is that some of these employees are receiving their full credits and cut-offs in each employment, meaning that they are not paying enough tax. The payroll software will handle these IDs in the background, but you will be able to override them if you wish to do so. Now we look at some of the PSR, the payroll submission request data items. And I should just say as well that most of the API is structured on what they call requests and responses. So the request in this case means the submission made by the payroll. So the first of these is, which refers back to the previous submission, is the RPN number. So the details provided by revenue in the RPN will also include an RPN number. So this same RPN number will then be included in the periodic PSR, and this will show revenue that the employer is applying the correct or most up-to-date tax credits and cut-offs for the employees. The next item is gross medical insurance paid by employer, and the current P35 specification looks for the amount of medical insurance eligible for tax relief. And this information needs to be obtained from the medical insurance provider as it cannot be worked out by the employer. Fortunately, the PSR specification is just looking for the actual amount paid by the employer, as in the amount which gives rise to a BIK. Expected number of pay periods in a full year. This, in my view, is what may end up paying for whatever PAYE modernisation may cost to implement. At present, if there are 53 pay days in a tax year, the employee gets an additional week's tax credits and cut-offs in the week 53. From 2019, the software and the employer will need to know from the start of the year how many pay days there are. If there are 53, then the year's tax credits and cut-offs may be spread over the 53 weeks, as against being spread over the 52 weeks with an additional week being given in week 53. And my own back-of-the-envelope calculation is that this could add at least €100 million to the government coffers each year. We're going to give you now a quick 5-minute demo of the RTI, which is what's real-time information features in our UK software, which shows how it works there. We'll look at retrieving coding notices, which will mirror the RPN retrieval, finalising the payroll and submitting an FPS and getting a response, which will mirror the PSR submission. And I just want to point out that the software we're using here to demonstrate is BrightPay. We don't have Thesaurus Payroll Manager in the UK, so it's the only one we can actually demonstrate at this stage to give you a flavour of it. But suffice it to say that Thesaurus Payroll Manager will have these features anyway for the start of PAYE Modernisation. So I'm going to hand you over to Audrey, and just bear with me a second while Audrey gets set up here.
Thanks very much, Paul. So this is PAYE UK payroll software. I suppose we're fortunate that we have something we can show you, because we have the system up and running in the UK. So my payroll here is in the current pay period, so it's the week ending Friday the 27th of October. Real-time reporting has been in the UK since 2013, and the process required each pay period will give you an idea as to what you can expect in 2019 in Ireland. So every pay period before processing the payroll, the first task that I should do would be to check and see if there's any changes to employees' tax codes or tax bases, etc. And this is done by simply clicking on coding notices within the menu toolbar. Okay, so I should ensure that my sender ID and password, so my user credentials, are correct, and then I can simply click on check for notices. Okay, so it's just going to check for me there. So if there are any changes to be implemented, they will display on the screen for me, and I do also have the option of printing the current notices. Okay, so that's just a printout if I'd like to keep that for my own payroll records. Okay, so I can simply select the employee for whom the coding notice is to be applied to. Okay, and then just click to apply selected. So that's changing the employee's tax code there on BrightPay, and at any time I can come in here and just click on the History tab, and that will just show me the history of the coding notices within the payroll software. Okay, I can now close out of the coding notices section, and I can see that my employee's tax code, so for Flora, has changed as per the coding notice. Okay, so we would envisage that the revenue payroll notification, or the RPN process, will very much follow, similar steps within the Irish payroll. And similarly, every time an employer pays employees in the UK, the employer is required to send what is known as a full payment submission, or an FPS for short, on or before the pay date to the HMRC, which is the UK Revenue Authority. So it's on or before every payday a submission is required to be sent to the HMRC. The FPS is used to inform HMRC about payments made to every employee and all their associated deductions. It is also used to report new starters and leavers. So the payroll submission request that Paul has just spoken about will very much be the equivalent of the full payment submission, or the FPS, in the UK payroll system. Okay. So to produce and submit the full payment submission, the next step is simply for me to process my payroll as normal for the pay period. So I'm just going to click on Finalise Payslips. Okay. So I'm going to finalise the payslip for this pay period, pay date the 27th of October, and it's picked up the fact that I have a leave date in for Benedict. So this is going to be reported on the full payment submission to HMRC, so that's the leaver information. So I simply just click on OK. So the payslips are now finalised, and up in RTI I have one. So this is telling me that I have one submission that needs to be sent to HMRC. So if I click on that, so all the previous submissions, as Paul spoke about, are accessible within the software, and this is my most recent one here, the full payment submission for payment on the 27th of October. Okay, so if I click on that, we can see the submission summary and the submission XML. Okay, to send it, I simply just click on Send Now. You can see the leave date for Ben is being picked up here, so that's informing HMRC that he's a leaver with a leave date of the 27th of October. The submissions can be printed or exported, so if anybody wants to, I suppose, keep a copy of those, or you can go back at any time and print them. Okay, and a handy feature on the full payment submission is that we include the totals for the submission. So down at the very bottom, you can see total amounts in the submission, and that can be handy for, doing reconciliations when and if required. Okay, so to send it off to HMRC, I simply just click on Send Now. Hopefully the HMRC test server is up and running. Okay, so it's just telling you there, this waiting for a response.
There we go.
Okay, so that's how quick it is to send the submission to the HMRC. Once it's accepted, you can see, well, firstly it tells you when it was created, when it was sent, and then when it was accepted by HMRC. And we also have a handy feature there of the gateway log, so that's the history of all the communication back and forth between the payroll software and the HMRC. If for some reason the submission was rejected, you would see a little details button here, and that would, by clicking on that, it would tell you what, the reason for the rejection of that submission. And if required, then you can change the, the relevant information within the payroll system and just send the submission again. So once the submission has been sent, the only task left to do then is, as normal, just to issue the pay slips and pay the employees, and it's the same process every single pay period. So if you like, I suppose it's one extra step in your, an extra payroll task with your weekly or periodic payroll.
Yeah, I think because of the APIs, it kind of makes it a lot quicker anyway.
Absolutely, very user, seamless.
Okay.
Okay, thank you.
Okay, thank you very much for that, Audrey. I suppose one of the things that just struck me when I was looking at that demonstration was one of the other things they have in the UK is what's called autumn enrolment. Now there are plans for that to come into Ireland as well, but that is another process that the typical UK employer needs to follow as part of the overall processing of payroll. And, that will be something that will be hopefully seamless and API driven when that comes into Ireland as well. Okay, and one of the other things we do, the coding notices. Just when I was thinking about looking at Audrey's demonstration there, the coding notices there was basically a few clicks. You had one click to basically retrieve, and you had another click then to allocate to the employees. We still don't know from a development point of view whether we'll have it as one click in total or no click, and that it sort of happens seamlessly in the background. But I mean, we'll get to that in due course. Okay, so just looking at on or before and corrections. In the UK, the periodic data submission, or what they call the FPS, must be submitted on or before the actual payday. And that's basically going to be the way it is in Ireland, and that was confirmed in the recent finance bill. In my view, it would probably be easier to just submit after finalising each payroll in much the same way as in the UK demo we just showed you. At least you will know that the payroll is done when you close out of it. What I do, I'll just give you an example of what I do in the UK payroll we run here. I run the payroll as normal, but distribute the pay slips a day before employees are due to be paid. So I don't submit to HMRC at this point. And this gives each employee the chance to point out any errors or oversights that I've made in the payroll. And if so, I correct any errors, refinalise the payroll, and at that stage I submit to HMRC. And this approach really eliminates the need for correction submissions. There will be times when you have to hit submit button and then subsequently discover that you need to redo the payroll. And perhaps it's because you forgot to give someone their overtime pay, perhaps you hadn't downloaded the latest tax credits and the employee was expecting a big refund. The new system does provide for these types of situations and does allow for corrections. If a submission is incorrect, a correction submission can be made by the software. If the correction is for some months ago, revenue can apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, will be seen as a change to a statutory declaration. And if you have a constant pattern of corrections or late submissions, revenue may take corrective action such as site visits or audits. So they will really be able to identify and target the poor performers under the new system. In the UK, when they rolled out RTI, there was a period of grace of up to 2 years before HMRC started applying penalties for late or incorrect submissions. We have no indication yet as to whether Irish Revenue will follow suit or what the penalty regime might be. In relation to the correction submissions, it is interesting to note Revenue's thinking on when a correction submission may be required. They very much operate on the principle of follow the money. For example, if an employee is paid the wrong pay in week 1, and it is this wrong pay that is included in the submission, and then subsequently their week 2 pay is adjusted for the over or under payment, no correction submission will be required, as the week 2 submission will automatically include the correction. However, if the actual amount paid to the employee in week 1 is not the same as what is reported in the week 1 submission, a correction submission for week 1 will be required. Needless to say, the payroll software will automatically prepare the relevant correction submissions if any previous pay periods are subsequently adjusted by the payroll operator. So just looking at some of the other items that I felt were of note in relation to the new system. First of all, directors. As is the case at present, any shortfall in directors' pay, say by virtue of a debit director's loan balance, can be processed at the year end in month 12. The tax consequences of this will be no different as to heretofore. Annual payments. There is no change here except insofar as the return shall be made for the month in which the annual payment is made. Heretofore it would probably just have been included on a P35. Data alignment. In the latter half of 2018, payroll software will prepare a return, much like an employee register or a P35 without the figures, for submitting electronically to revenue. This will enable revenue to have as accurate information as possible for when the new system starts in 2019. Therefore, the RPNs, currently known as P2Cs, should be as complete as they can be when issued for the first pay run of 2019. Disputed liabilities. One of the main shortcomings in the UK system is the difficulty in reconciling taxes owed where HMRC's figures are different to what the payroll says is outstanding. These differences are usually due to HMRC duplicating employments due to mix-ups with payroll IDs, which is their version of what would be called employment IDs. Unfortunately, with the UK system, there is no facility to query or drill down into their figures. We have been advocating the availability of an API whereby the payroll could query all data submitted in the year to date, so that the payroll could then perform a reconciliation between this data and what it has on file. Such an API would also be particularly useful where employers change their payroll software mid-year or move from a manual system mid-year. The present thinking on Revenue's part is that they will provide a facility whereby our software can query the pay runs included in any P30 and then further query each pay run, drilling down to each line item, in other words, each payslip item. This should allow for reconciliations in the case of differences. Revenue may also provide a separate API request to help with payroll migration. So, Revenue estimates that of the total 208,000 Irish employers, up to 60,000 employers still calculate their payroll manually. They will still be able to calculate payroll manually. However, in each pay period, be it weekly or monthly, they will need to log into ROS and enter all of the required details for all of their employees, a bit like manually completing a P35 each pay period. This facility in ROS will only be available for employers with 5 or less employees. In addition, these employers will need to check for updates of tax credits and cut-off points before processing each and every pay run. All of this will obviously be quite time-consuming and prone to error. Therefore, it should become apparent to these employers that they should either be using the services of a payroll bureau or that they should use payroll software. So what do you need to do next? Well, first, check that your payroll will be able to handle the change and that you won't be charged for the new functionality. If you are currently doing your payroll manually, consider the huge time savings and reduction of errors that using payroll software will bring. Our own package only costs €149 plus VAT for the full year. Alternatively, investigate the possibility of using a payroll bureau. Either way, you will save a lot of time and drastically reduce the possibility of errors and correction submissions.
Okay, good morning everybody. As Paul said, I'm the change manager for the PAYE Modernisation project, and I suppose what we hope to do this morning is just to give you an overview of how the system is being changed. I suppose give you some context in terms of why we're changing the system, and then just to run quickly through how that's going to impact on yourselves. We're just getting set up there. Okay, so just in terms of the design principles and the background and why we're actually modernising PAYE, as Paul mentioned, the system has been in existence, the current system, since the 1960s, and really all that has changed in that period of time is where we have allowed for information to be uploaded onto ROS, or where some forms have been simplified. But now we really need to bring the system in line with what people expect on a daily basis in terms of how they manage their employees' payrolls, and also what employees expect to be able to see in terms of their tax and what has been paid over to revenue. So employments themselves and the nature of the way people have been employed since 1960 has changed dramatically. So you now no longer have people working in one job for the majority of their employment lifetime. You have people who work various employments for various employers. For example, people in the HSE may be working as a nurse, may also be working as a carer, and they're two separate employments but both working for the HSE. You also have people who work several jobs on certain hour contracts for several employers. So in order to be able to properly assess what their tax credits and tax due is, it's important that the new system can account for several employments. Payroll in itself has changed dramatically since the 1960s, and it's now quite sophisticated in terms of the packages that are out there and what those packages will do for you. ICT has allowed all of these changes, so our technology has advanced extensively since 1960, and with the introduction of the internet, we can now do everything on a web-based platform. And people expect to be able to do things in a much more streamlined process. And particularly for employees, this will be a new way for them to be able to look at their tax and PRSI deductions and be able to have more meaningful conversations with revenue should they need to. In terms then of the PAYE system itself and the benefits that we hope to achieve for employers, we hope to have seamless integration into the payroll of your payroll run, and then in turn that report coming into revenue. Over time, it will minimise the cost for employers to comply. We are abolishing all of the P forms, so there will be no longer any need for P30s, P45s, P46s, P60s, and the P35 end of year return. That will all now be done away with. It will mean that the right tax is paid, but the dates for that payment are not changing, so they still remain as is, and ultimately it will result in time savings for the employer as the new system beds down and gets up and running. Obviously there may be some teething problems, but over time there should be time savings for the employer. In terms then of the employee, well, they will now have simplified access to the online services. So where they go on to Jobs and Pensions and register, they will now be able to view what has actually been paid and deducted on their behalf by their employer. They will also be able to move around their tax credits, particularly where there are partners or married couples where they want to split credits between themselves. And they'll be able to just make sure that they're maximising the use of their tax credits and rate bands. At the end of 2019, it's proposed that we will do an automatic end-of-year review for each employee, and that will ensure then that people are actually just paying the amount of tax that they should be paying. It will also mean that we will have access to real-time accurate data, and that the employee will now be able to see that, and it will give them a level of transparency that heretofore they didn't have. In terms of revenue and the benefits then for ourselves, we will now have a statutory in-year employer return. It will make compliance easier. We will now also be able to view accurate, up-to-date income details, as we would regularly have calls from employees where they're looking at their payslip and wondering how something has been calculated. And up until the system goes live, we won't be in a position to do that, because obviously we get the details in a year after the transaction has actually happened. Over time, it should reduce customer contacts, as a lot of what the individual will need to do will be available online. Obviously, as I said, as the system is new and it's going to be bedding down for a period, we do expect that there will be an increase in customer contacts in the early stages. And it will also allow revenue to carry out timely targeted interventions where we are actually able to react in a much more timely manner instead of actually looking to correct something that has happened more than a year before. So in terms of the context then, and Paul has given you some of the stats there already, but currently revenue has 2.7 million active employments, and that's for 2016. And that includes people who are in receipt of a pension. We have 206,000 employees that have more than one live employment. So, and then you would have lots of people who have multiple employments with the same employer under different contracts. We currently have 208,000 employers registered with revenue, and 110,000 of those employers have less than 5 employees. And that's something that we're very cognizant of and that we're working to ensure that those employers can manage the new system and will have options to be able to file what's required under the new system. 98% of our existing cohort of employers filed through ROS, and currently we are processing approximately 5.4 million forms. So that's forms that both the employer and revenue have to process. So that job of work will now be abolished. So just in terms of setting out what you're currently obliged to do. So currently every time an employer pays an employee, they must apply the latest P2C that they will have received from revenue. They must calculate the tax that's to be deducted, including income tax USC, PRSI and LPT, and they must provide the employee with a payslip that shows the pay and deductions that have been made. In terms then of reporting that to revenue, an employer must report on a P45 or a P46 for every employee that starts or leaves employment with them. Each month then, or each quarter, depending on how they're set up, they must submit a P30 with the relevant payment. And by February of the following year, they must complete a P35, which contains the listing of each of their employees. So in terms then of how that's going to change and how the new system is going to operate, as an employer, the employee will now go as if they're going to do their payroll as normal. They will get their latest revenue payroll notifications, which will seamlessly integrate with their payroll. They will then perform their calculations as they would normally and finalise their payroll. They'll create their bank file or their cheque payments. They will also create their pay slips, and then at the same time that report will seamlessly come to revenue. For the employee then, they won't really see any difference in terms of how the payroll has been operated. They will still receive their money in the bank or into their hand if it's a cheque, and they will receive their pay slip, but now they will be able to see in the jobs and pensions module on revenue.ie the pay and deduction that has been paid over on their behalf for that pay period. In order to get rid of the actual P forms, we've obviously had to put other mechanisms in place to account for the details that would have been coming in on those forms. So for the P30, a statement will be issued to the employer each month with the total tax due based on the submissions that they will have made in that month. The employer will then have a period of time to check that that is correct. If we don't hear from the employer, we will deem that statement as being correct, and that will be what the payment should be on the return due date. The payment, as I said at the outset, is not changing the payment date, so those payment dates are remaining as they currently are. It will now allow revenue to commence debt management for underpayments in year, and obviously then any of our in-year interventions will be based on a risk analysis of what has actually been reported to revenue. So for the P45 and the P46 process then, when somebody new joins an employment, they will be set up in the payroll, and then revenue will be notified when they commence in that employment. So that will happen seamlessly. They will then get the latest revenue payroll notification and perform their calculations as normal. The employee also has the option to go on to jobs and pensions and set up their new employment and also accept revenues division of the credits and the rate bands, or alternatively, if they need to move credits and rate bands, they'll have the option to do that there as well. So in terms of getting the message out there and making sure that all employers are aware of what the changes are going to mean for them, we have been engaged in an external stakeholder engagement process. But it has become clear to us from that process that some employers focus on an end-of-year process rather than working on a payroll payment process. And that maybe has contributed to in-year payroll processing practices that are not fully in line with the current PAYE regulations. But the real-time reporting regime will make these processes visible, and as such these processes need to change, as now it will become either a weekly, fortnightly or monthly payroll notification that will have to come into revenue. As Paul mentioned, corrections are something that happen in payroll, and it is something that we're cognizant of, and we have made every effort to ensure that we will have the option there for employees to be able to amend the data that they have submitted should corrections need to take place. But it should be borne in mind that really what we would like is that the submissions coming in are accurate and timely, and also employers must be cognizant that if they are continuously sending in corrected submissions, and if the submissions are late, that will feed into revenues risk analysis systems. DEASP income, and again Paul touched on this, we will receive real-time interfaces from DEASP of what the taxable income will be. This income will reduce the tax credits and rate bands, and this will mean an updated revenue payroll notification will be made available to the employer. Where the DEASP payment has been mandated to the employer, the revenue mandated to the employer, it's necessary for the employer to remove the payment from the pay for income tax PRSI USC and calculate the deductions based on the RPN. Where the DEASP payment has not been mandated to the employer, then they should use the RPN to calculate the deductions. It's important that the payroll is polled for an updated RPN every time that the payroll is run to ensure that the correct deductions are being made from all employees. As Paul also mentioned, illness benefit will now start to be taxed via the P2C from 2018, and as a result there will be more frequent P2Cs for employees who are in receipt of illness benefit. And also from the 1st of the 1st 2018, the illness benefit letters that currently come in from DEASP will no longer be delivered to the Ross inbox. So in terms of getting ready for the change, we have engaged in a data alignment process where we have been reviewing data that has come in both from the 2015 and 2016 P35s. And on that basis, we are contacting employers who appear to not have informed revenue of new employees. So employees that have maybe have started working for them in 2016, but they only put them on the payroll when the P35 was being filed. So those letters have issued, and they have continued to issue during September and October, and more letters will issue in November. And these letters will be available to view in your Ross inbox, and they'll be listed under the category of PAYE EMP P35L review. We're also looking at cases where they currently have a W number, and we're working with DEASP to ensure that those W numbers are replaced with a new PPSN, and we will be advising you on the RPN if such a case is happening, and that's the same with the SP cases. So that's coming down the line, and as those letters issue, they will be available in the Ross inbox. Later on in the year for 2018, we will be requesting all employers to submit an employee list and probably in around June when the P30s are coming in from June. And really what we want to do there is to carry out an exercise to ensure that we have got all of the employees that are currently working for you registered with you on our revenue system. And this is really to ensure that for 2019 the RPNs that we'll be issuing will be correct. We are aware that sometimes employers receive P2Cs for staff that maybe have never worked for them or are no longer working for them, and we want to ensure that this is tidied up and cleaned up. So if you get one of those letters, we'd ask you to follow up on what is being asked of you to carry out in that letter. And then we will also be carrying on a matching up exercise when we receive those employer lists. So in terms then of getting the message out there, we know it's going to be a challenge for revenue to engage with employers who are not covered maybe by the main representative bodies or other umbrella organisations. We are trying very hard to make sure that the message is getting out there to all employees, as they need to be aware of their changing obligations. And we have engaged in this process right through 2017, and we will continue into 2018 to try and meet with as many employers as possible or with their representative bodies. We are aware that the timeline for implementation is ambitious, and the system is going live on the 1st of the 1st, 2019. And we do realise that for both revenue and for employers, there is a significant business process change and a change management exercise that needs to be completed well in advance of 2019. And it does require readiness on both sides, and we know that it will be challenging in terms of the timescales, but we will be monitoring the changes and how those changes are being impacted for employers throughout the project. We hold a monthly stakeholder steering meeting where the majority of the representative bodies have nominees who attend, and also the Payroll Software Developers Association. And that's really to ensure that the individuals that are represented there are fully aware of how the project is progressing and any changes or requirements that may be needed as the project progresses to ensure that everybody is ready for the go-live date of 1/1/19. Just to give you a flavour of some of the engagement that we have been carrying out during September, October, November and December. You can see there we've met with a lot of large employers. We've also attended a lot of the Big Four client events. We've carried out a couple of these webinar conferences, and we will be carrying out a significant amount of presentations with IPAS in the next 2 months, where we will be attending their annual budget update days. So again, we are doing our best to get the message out there. So in terms of yourselves and what you need to be doing in order to get ready for PAYE modernisation, it's very important that you have the right PPSN number for all of your employees. From the engagement that we have carried out to date, we are aware that incorrect PPSNs are being used or made-up PPSNs are being used, and that won't be acceptable for the new system. It's also vitally important that when somebody commences employment with you, that you ensure that they are fully registered with revenue and that you have an up-to-date tax credit certificate for all of your employees. If you have employees then that are ceasing to be employed with you, you need to ensure that you have completed the P45 process fully. And then in terms of the new system, you need to currently have a look at how you are managing your benefits and notional pay, so your BIK, and that these are being accurately calculated during the year. And what we would suggest is that maybe you would look at doing a quarterly review of your BIK processes, because those will now be visible to the employee on a weekly or fortnightly or monthly basis as they are returned. And just to make sure that you're aware of your duties as an employer at the end of the year in terms of the P35 process and also the P45s for any staff that have left. So the next steps, We will be having regular updates on revenue.ie, and all of the information is constantly being updated there. We will continue to hold the monthly external stakeholder update meetings, and we do have a WebEx facility. If anybody would like to attend any of those, they can contact me there on the dedicated email that I have up there. It's PAYE Modernisation @revenue.ie. So that's it really for this morning, and we're happy to take questions as part of the panel discussion.
Okay, listen, thank you very much, Sinead, for that. You did well considering you just got back from holidays early this morning. There's a lot of change coming up in 2019, and hopefully this is giving you a flavour that, you know, it really shouldn't be that big a change, because the software side of it is fairly straightforward, to be honest with you. We've already done it in the UK, and it worked fairly well, even the introduction of it. Particularly where you operate, you know, a normal type payroll where, you know, you're not getting the information sort of from your employees too late, or, you know, in other words, you just operate like a normal payroll that you process and you pay each week or each month. It should actually save time, which is obviously a positive thing. I think we have Sandra. Sandra's joining us here as well. Sandra is a council member of the Irish Tax Institute, and she's also in practice. So I think one of the first things I wanted to ask you, Sandra, was how are you going about sort of, or I know it's probably an early at this stage, but what would be the challenge you see in trying to advise your clients on how to prepare for this modernisation process?
Yeah, as you say, I'm an accountant in practice, and I act for a large number of employers, and obviously this is new territory for us all, and as referred to by Paul and Sinead, it's one of the biggest overhauls we've had to the PAYE system in a lot of years. There are a number of challenges going to be involved for the employers, obviously, you know, getting the information correct to revenue before 2019. For the likes of accountants or people offering payroll bureau services, the first few months of 2019 are going to be very challenging in completing P35s for the year 2018 and also adapting to the new system.
The overlap, so to speak.
Yeah, the overlap, and that obviously also applies to all the employers who manage their own payroll, such as the audience listening in today. So you're going to have the same challenges of, you know, preparing your P35, filing your P35, ensuring that all of that's correct, but also implementing PAYE modernisation at the same time. Obviously, there's also going to be a lot of queries from employees as well, because it's going to be new for them. And you're going to have to obviously deal with that, so that there will be certainly time challenges involved for all. I suppose the key message today would be preparation is key, and as much information as can be given out to employees at this stage, or certainly throughout 2018, in advance of the new system coming into place, would hopefully make it a little bit easier on yourselves as the employers processing the payroll and dealing with the queries at the time from the employees.
Okay. So we start with some questions.
Are you ready to start questions?
Yeah,
okay. So the first question in there is, will the real-time revenue data include social welfare payments that currently have to be reported to the revenue by individuals?
I'm not sure what payments we're talking about there really, but at the moment we will be getting a feed from the Department of Social Protection, so that anything that is taxable will be coming in on that feed to us. So if it needs to have an amendment on the person's P2C or RPN, that will be happening.
So the only link is for maternity, paternity and illness benefit, and they'll all be covered by the amendment. What happens if you have to amend payroll after submission?
Well, a correction submission can be prepared by the payroll software. So it's like you do at present. You would reverse your payroll, make the correction, and then refinalize. That will automatically create or prepare a submission that will correct the previous submission. It's fairly straightforward. I suppose the only issue you have is where the correction may be from some time ago, like a few months back, where that could probably give rise to interest.
Okay, the next question then is, I operate as a sole trader and I employ two people part-time. In the busy season, they could be 2 days, 1 week. In other words, it varies. How do I submit a weekly wage as it will vary?
Well, it'll depend on what you're paying them, and that's what needs to be submitted as you pay them. So if they've only worked 2 days, then you submit the amount that you've paid them for 2 days. Or if they haven't worked at all, then obviously there's going to be a nil submission for that person for that period. So it's whatever you pay them, that's what has to be returned.
Follow the money, as Paul said earlier.
Yeah, follow the money.
Yeah, it doesn't matter that it varies.
It doesn't matter that it varies, yeah.
At the end of 2019, will the review mean that employees will possibly have underpaid tax and will be due to pay additional tax at year end?
Yeah, that is possible, where the correct P2C hasn't been applied, or maybe they hadn't split their credits out between different employments. But certainly the review itself, I'm sure, will absolutely throw up situations where there will be underpayments. In a lot of the cases, those underpayments can be spread out again by reducing the tax credits for the following year or the following 2 years. But again, if that happens, it will mean contact with revenue directly, and something can be put in place to ensure that it's paid back in a manner that's feasible for the individual.
So in 2019, when do you see the first occasion when revenue will carry out a review?
It'll be at the end of 2019 into 2020, when the system is up and running for at least a year and has bedded down.
But really, with the checking for RPNs, on an ongoing basis, there should really be a huge reduction in the number of...
Absolutely, and the fact that we're now doing it at alignment, if we see where the incorrect P2C has been used, we will be contacting either the employer or the employee at that point.
Okay. The next question then, new staff member began in 2016. She was included in payroll and appeared on the P35, etc. for 2016. I used Thesaurus. I don't think I did a notification to Ross. Do I need to do one now? And this is really where your letters are coming in.
Yeah, exactly. That person will be included on those letters that are going out. So you will more than likely be getting a letter in respect to that person if they haven't already got one, so you need to check.
Well, the letters that have been issuing are quite general, just saying that the employees that it's noted that there are employees that were on the P35 who were not registered with revenue. So to rectify that, you have to file online through Ross P46 or P45 Part 3 if you have it.
And I think this is from the same person actually, also someone new started last month. Do I need to notify Ross, or does Thesaurus automatically do that? So I suppose for the moment you have to do it by either uploading a P45 Part 3 or a P46, but under the new system it'll all be part of the payroll submission request.
Yes. Or the other alternative is if the employee through their My Account registers the employment themselves.
Yeah. The next question then is, can you please explain how or if this will impact on fixed term contracts, temporary contracts, subcontractors?
It's not going to have an impact per se. Again, you're back to the follow the money principle. If you're paying somebody, you have to return that to revenue when you pay them. And that's the basis of the new system. So it's irrelevant if they're on a fixed contract or a temporary contract. It's as they're paid.
Paul will answer the next question. Is there any plan for Thesaurus to be available on Mac?
On Mac? Well, no, there is no current roadmap for that. I mean, I know I do have it on my own. I use a MacBook Pro, and I have what's a VMware with a Windows 10 virtual machine running on it. So that's how I get around it. But no, there's no plans for that at present.
Possibly down the line, maybe Byrne pay.
Possibly, yeah. And as we move to the cloud, I suppose over the next few years, more and more so, that makes it compatible with every type of device then.
Okay, thank you. Sinead, this is probably for you. If you register an employee but do not receive a P2C, what do you do next?
Well, then you need to contact us. So, because there's obviously an issue, so direct contact would be the best option there.
Perfect. Thank you, Sinead. The next question then, when payroll is operated on a weekly basis, what happens if the payroll operator is off on leave or sick? How's this dealt with?
Well, it's in the same manner as if they're out sick and you need to run the payroll. I'm sure the employees are still going to get paid. So whatever process is in place for when somebody is out or if somebody runs a payroll, it'll still have to come into revenue.
Yeah, if someone else is done and does the payroll, they send the submission.
They send the submission, yeah.
Or if the payroll is done late because they're out sick, then the
submission comes in late, yeah.
And holidays then, I suppose, normally this holiday covers, so again, or you may
and
do
I
the
think
payroll in
in some of the
advance.
systems that allows them to do it in advance. So, I mean, or if the person knows they're going on holidays, they can send in the 2 weeks
Yeah, because it's on or before.
in advance.
Yeah, I think the holidays are fine. It's probably more
If
the
somebody's
question is
missing.
generated at, especially in the smaller businesses. Some people may not even have access to the payroll system. So generally what would happen if somebody is out sick like that, they would just maybe pay the staff the same as what they got last week and maybe rectify it. So they're not actually processing the payroll, they're probably just processing the payments.
Yeah, I think that's one of the challenges, I think, on the new system. I mean, a lot of processes will need to be put in place to deal with those circumstances.
To have plans like a backup, yeah.
You know, I know it's a change of mindset as well for some employers, because they would be just paying net to gross or just making payments and then dealing with it all afterwards, whereas really it needs to be done as they're paid. So basically just need to operate payroll properly, really is the message.
Okay, the next question then, we make P30 payments quarterly. When will they be made in the new system?
There's no change, so the P30 quarterly payments will be the same. There's no change to that.
You'll still do a reconciliation every month, you'll go to quarterly payment.
Yeah.
My account, if you have a married couple, should each partner have a my account each, or will one do, opted to be taxed together?
They would have an account each.
Yeah, perfect, thank you.
I think they have access to each
They
other's
can
information though within that, can't they?
agree to have access to each other's information. Yeah.
Okay, when a new employee starts on the first week of employment with no P45 from previous employment, will they be automatically on emergency tax? So I guess this is a question for PAYE Modernisation.
Yeah, well, I suppose, again, if the individual themselves has gone on and registered on jobs and pensions with their new employment, they won't need to have that emergency tax applied. But if it's just left blank, emergency tax will have to apply. But I mean, ideally we would hope that as soon as the individual puts them on the payroll, that's going to trigger the request for the RPN. So I suppose we're really trying to reduce the usage of emergency tax.
Okay, thank you. Will expense payments be included in transfer to revenue?
No, I don't believe they're not included in the specification.
Only
No, so there's no non-taxable elements on this
only if they're
aspect.
taxable.
Okay. Will employees have some written proof of illness benefit payable in 2018 prior to the changeover to tax credit in 2019? Okay, so really this change is coming from the 1st of January 2018. They changed to the taxation of illness benefit, so that's from the 1st of January 2018.
Yeah. So what's the question there?
Well, will they have written proof? So I guess this is in relation to my account
really-
with social welfare.
It's more, that's really a social welfare issue, and they're currently working through how this is going to work. So I can't actually say whether or not they will be sending something in writing to the employee, but what they've told us, they're not sending the letters that they used to send. So
I think
how that's going to impact for the employee, I don't know just yet.
I think they can probably log in though. Can't
They will be able
get
to log
print out
in
a
and see a
I
statement.
think the onus will be on them really to do it. I
Yeah.
don't think anyone will prompt them to do it.
Yeah,
On my
from the
welfare.
employer's point of view, the employer no longer has to deal with
No.
the illness benefit, so it's
So
really for
if
the
the
employees.
individual needs to see something, they will be able to access it on mywelfare.ie.
I suppose I think the question probably more relates to their sick pay scheme.
It could be to do their sick pay policy, yes. So I don't know, employers may put something into the sick pay policy to say that the employee has to provide that
Provide a
document from my
printout
account.
yeah.
If an employee does not have a PPS number, can I register them on the payroll system, or do I have to wait until they give me the PPS number?
Well, the periodic submission request can include those employees for a certain period of time, for a number of weeks before the actual PPS number is issued. And that's right, is it, Sinead?
Yeah, that's correct, yeah. So I mean, if they don't have a PPSN, we would encourage them to put them onto the payroll, but after I think maybe 4 to 5 weeks we'll be looking at that, because it can't continue on without a PPSN. So we do know there are time logs in getting PPSNs, particularly for people coming in from abroad to work here, and that, or maybe people waiting to get visas, that there might be a delay in getting it. But really what we would be looking for is that you do have a PPSN for the individual, but obviously we know there are circumstances where that's just not possible. So we will allow a period of time, but if that was to continue, then that would be triggering an intervention from revenue.
And obviously without a PPS, the emergency tax will apply, and it'll be the full rate of emergency.
Yeah.
Okay, will PRSI codes be included in the revenue feed with the tax credits and cut-offs?
No.
It'll simply just be the information in relation to income tax and USC and local property tax.
Yes.
Okay, so does that mean then that the employers are effectively then the same as they currently are, choosing what PRSI class?
Absolutely, and probably prompts within most payroll softwares,
Yeah.
if the PRSI class is wrong. Okay, can we still pay wages a few weeks in advance, as we find this handy if we were going on annual leave, etc.? So yeah, there's no change there, but you should just report it as it's paid.
Yeah.
Is there a facility for employees to have a printed P60 example for a bank loan?
Yeah, what will be available to them is a statement of their account, and they'll be able to go in and print that down at any point in time, and that can be saved in under the jobs and pensions under My Documents. So we will also be in touch with the banks and any other institutions that require a P60 to advise them of this change, and that this piece of paper will now be accepted by them, because I know sometimes they look for an official piece of paper, and maybe just coming down from their own printer may not be acceptable, but it will be, because that's the only way that we're suggesting that these will be made available.
Okay, thanks, Sinead. Will this be the same for self-employed directors of the company, or will they still be yearly?
It depends on how often you're making the payments to directors. Like if directors are on a salary, they're reported monthly or weekly, the same as employees. If we're talking about one-off payments to directors, which sometimes happens for, holding of office, etc., or possibly clearing a director's loan, and then annual payments as before continues the same basis.
Okay. Will there be any handbook or correspondence that employers can give to employees to explain the changes to them?
Yeah, we will be designing some material for employees, but we have left them at the moment until next year, because we feel it's a little bit early to actually start educating them in terms of the changes. So there will be information available that employers will be able to give out to their employees, and we'll also be putting most of the information up there on revenue.ie as well. But at the moment we're focusing on employers, because really our goal is to get the employers ready, and then it has less impact on the actual employees in terms of the changes. But there will be information available for them.
Okay, this is really similar to a question we've already covered, but on or before deadlines in a small business like ours, when I take holidays of say 2 weeks, there's no one to cover my holidays. The employer normally pays each employee their normal wage, and amendments are made by me when I process the 2 weeks on my return. How can I meet the weekly deadlines?
I think, Sandra, we answered that already, really, in terms of, we understand that there's difficulties with that, but I mean, it can be calculated and sent in advance, and that's probably what we would be encouraging.
Yeah, and basically then any corrections that have to be made will be
made
in the
after.
following week. Yeah.
Okay, what happens for employees who do not register for My Account? How will they get P60, or will there still be a facility to issue P60 from payroll software?
There'll be no facility to issue P60 because the P60 no
It's
longer
gone.
exists, it's gone.
Really?
And the statement, they will, if they want the statement, they're going to have to create a
An
My
account.
Account, I assume,
Yeah.
is it?
Yeah, my account, yeah.
I know there is some talk on having a document that can be printed from Windows software similar to a P60, and I don't know whether that would be something we will pursue or not.
Yeah.
But I can
I
see,
know,
I
But
can
it
see
probably
that.
wouldn't be revenue recognised,
No.
because
it's
you're
not.
saying they're gone,
No,
so.
we would be encouraging everybody to have a My Account, but we do understand that there are people out there maybe who don't have, e-facilities and maybe are not web enabled. So, we are, as Paul said, we are considering it, but I mean, really, the option is the My Account.
When will revenue issue latest RPNs?
The RPNs will issue every time the payroll is run. So every time we get a payroll notification, it will be updated.
If a payroll manager is taking annual leave and needs to prepare employees' wages in advance with payment scheduled during their leave, will the new system accommodate this? And really, this is what we're saying, yeah, you can send the submissions in advance.
Send in the submissions, and if there's any amendments, you can just submit them thereafter.
I think that's probably one of the issues with, say, Ross today, is just that sometimes they can't accept future dates.
Okay.
So, if somebody is submitting their payroll submission in advance, the new system will accept it.
Yeah, like I suppose at the moment, like for example, the main one there would be P45s. I was preparing
You could
payroll
produce
yesterday
it.
morning for somebody,
Yeah.
2 staff are leaving this Friday. I prepared P45s, but I couldn't upload them to Ross, I couldn't produce the P45 until Friday.
So we have taken that
Yeah.
into consideration, and that won't be happening in the new system.
Sinead, running 2 payrolls for 2 shops with the same employer number, can payroll submissions be made separately?
Yeah, they can, absolutely. They can be paid. They can be made every time a payroll is run. So if they're running one weekly or one fortnightly or on the same day, whatever, 2 submissions can be made under the one number. It's no problem.
Okay, if an employee has some self-employed earnings, can they go into My Account and put it in as they receive it, so taxes are taken immediately instead of waiting until the end of the year?
That's
question.
interesting. Yeah. No, that's currently not something that we've looked at. No,
Okay.
they'll still be required to
Okay,
fill in their income tax.
will they be able to go in and say, okay, I want my credits reduced by so much, or can they do that?
I'm not sure, because now that works on the year behind basis, where you can go in and get the credits reduced for going forward. If you have a tax liability. So I don't know is the honest answer. It's not something that we had considered.
Okay, just another question there. What will happen if there is no payroll for a period, for example, holidays? So this would be where everybody has been paid in advance.
So it's a nil submission.
If there's nothing to submit, you
It's
just
a nil
don't,
submission.
you will see from the previous return that there was,
It's
by the
covered
insurable
3
weeks
months.
and everything that it's covering, yeah.
We mightn't even be making a nil submission.
No, just
There'd be-
very blank.
There'd be nothing,
Yeah, there'd be nothing,
submitted
yeah.
for those for the holiday weeks, because the previous submission covered that.
Yeah, and revenue will see by the
Yeah.
previous submission.
Like I know in the UK they do have a thing on the FPS where you have a marker to say, or no, the EPS, isn't it? You put in a
yeah.
marker that says there's going to be a period of inactivity, and therefore HMRC knows that they don't need to pursue a particular employer that may otherwise appear to be late. And I don't know what I know nothing has been
We have
talked about
nothing,
really.
Even at that, Paul, that's a complete tax month.
Yeah.
So normally for holidays, do you know what I mean? You'd still have payments within the tax month, just not for a specific week maybe within the tax month.
Okay.
So probably wouldn't cover that situation. Will Revenue be offering a solution to create a payment submission online without using payroll software?
No, we won't be offering a solution, but for employers that have possibly less than 5 employees, we will have a facility for them to go on to Ross and upload the basic details in terms of what's being calculated for the payroll. But that really will be just in exceptional circumstances where there's maybe, don't have e-facilities or whatever the case may be, but they'll all be looked at individually.
Thanks, Sinead. What happens for a new employer comes to a bureau and says he wants to pay employees going back a few periods? Obviously, it's beyond the on or before dates.
I suppose it's like a correction submission then at that stage, and there will potentially be consequences. Now, I'd say in the UK when this was rolled out, there was a moratorium, I suppose, and penalties and such like for the first couple of years. And again, I don't think it's really been discussed whether revenue is going to be doing that or not. But hopefully there will be some leeway for everybody to bed down into this new system.
Okay, thank you. Is the end of year review similar to the P21 balancing statement?
Yes, it will be.
Okay, so who is responsible for ensuring the correct tax credits for all employees? Will it be the employee giving the employer details or the employer?
Well, the employer is responsible for applying the correct tax details, but obviously they need to get information from the employee, but it is the employer's obligation.
But the employer is going to be getting that information
From revenue.
Yeah, in effective real time.
So basically it's the employer's responsibility to apply whatever revenue throws back into the RPN request. Whether the actual RPN is correct or not is up to the employee.
Most issues probably arise now from either an employee not being registered and no P2C, or the P2C file just not being brought in as often as it should, so the RPN will eliminate a lot of that, I guess. Sinead, will allowances be made for those of us who have unreliable broadband?
Yeah, well, I suppose we are aware that there are areas within, the country that don't have reliable broadband, but I mean, at some point they will be able to upload the payroll, and we are insisting that it's uploaded as it's paid. So, we will have to look at ways around that, maybe, whether, they have to go somewhere else to upload the file or whatever the case may be. But at the moment, the broadband, I know, is being looked at on a national basis anyway. So that's something that the government are looking at, and we have certainly put forward that, we've had quite a few comments and queries in terms of what are we going to do. Our broadband doesn't work. Some days it does, some days it doesn't. So again, that possibly is an issue, but it's not really something that I can control in terms of say yes. But certainly if there's an ongoing problem, we certainly would look at that.
Bit of time there to get everybody's broadband working as it should. If no tax credit cert is available for a new employee, they haven't yet registered, will we still apply emergency tax and submit?
I think the answer to that is yes. I mean, it'd be full emergency as well. Did they say no PPS or just no tax credit?
No tax credit certs. So really the request for the RPN would go, and if the other employment hasn't ceased, it would get back a nil RPN.
Yeah. So it's whatever the RPN
Absolutely.
is what has to be applied.
Yeah. It's taking a lot of responsibility off everyone here and putting it all back on the RPN. So again, this is another holiday one. What happens if the person responsible for payroll prepares payroll 2 weeks in advance due to going on holiday? Any adjustments for overtime will be calculated in payroll run on return. Is this okay? Can submission go up 2 weeks in advance?
Yes.
So really, I think they're making amendments when they come back, so it'll be in the correct submission anyway.
Same as the previous queries.
And yes, you can submit them 2 weeks in advance. Really sure of this. What happens where a couple are jointly assessed? One is PAYE and the other is self-employed, i.e. a farmer.
It's the same as it is now.
Yeah, there's no change.
There's no change.
Okay. Will there be any implications for employees who are paid a net wage? We use net to gross.
Well, I guess the advice really is that you shouldn't be using net to gross because it could end up costing quite a bit, particularly if somebody's credits are they're reduced and you're continuing to give the same net. It's going to cost you a lot more. It's no different on the new system as it is now.
Revenue won't see that it's a net to gross because you'll see the gross and deductions. Yeah, so you'll have no idea that it's net to gross.
Yeah. Same system will apply as now, but as Paul said, it does make sense to try and agree terms on a gross basis, because I've come across before where maybe an employer has made a decision to hire somebody working out net to gross cost based on the information provided, and then 4 months in, their tax credits changed, and all of a sudden it was working out an awful lot more costly. So
Yeah.
I have filed P45s for a number of people, but P2Cs continue to be received for them. What should I do about those?
You need to contact Revenue.
I think you
Directly.
acknowledged that it does happen, but that
Yeah, we need to
alignment-
contact Revenue directly for those cases.
Thank you. We could have upwards of 60 subsidiary employees who deliver lectures for us outside of their main employment. We currently don't issue P45s as they could be required to do several hours throughout the year. How do I handle this?
be the same as it currently is, in that you're on a particular week or month, you're making the notification to Revenue that you're making a payment to one of those lecturers, and obviously you're applying the RPN as
it could possibly be a nil RPN then if they are in other full-time employment.
Yeah, exactly.
Unless they have allocated some credits out to the second employment.
Yeah, and there's no need to obviously issue a P45 because
they're continuing on.
Yeah.
So it's just that you put them in this week, you mightn't have them next week.
And it's up to the employee really to decide if they want their tax credits split between the two employments or not. That's a decision for the employee.
Okay. So this question, we are a national school, 60 pupils. We employ a secretary for 1 hour per week to do returns, payroll, etc. This person is paid twice a year, once at Christmas and June, for the 37 weeks per year. What will happen with this employee? So they're working every week but only getting paid twice a year.
Again, that'll be returned when they're paid. So every time
follow the money.
Yeah, it's follow the money, absolutely.
Okay, we have been asking the employees to use the jobs and pensions to register their employment and moving away from the P46. However, should we still be registering them through P46? We have noticed where we do that they receive no credits or a standard rate cut-off point.
Well, one registration should be enough.
Yeah.
You know, there's no need to do both, but they need to make sure that the employee is actually doing it.
Yeah, you would say, if they've done it, there's no need for the employer to do it. Well, I suppose unless they ask the employee, they won't know, so there could be an overlap.
There could be,
But it shouldn't cause issues.
No, it shouldn't.
Okay. How does Revenue anticipate the uptake in my account in employment where employees typically think all the obligations on when registering for PAYE is the employer's responsibility? Many construction employees do not typically want to get involved in registering online.
Yeah, it's
Don't pay them.
They'll soon get interested.
They'll soon get interested, yeah, exactly.
Yeah, I suppose too, look, it's, I would come across this a lot as well. Employees a lot of the time just say, oh, they haven't a clue, they don't know what to do.
Yeah.
Inevitably it ends up falling back on the employer because it's the employer's responsibility. So I've had situations where the employees are coming in and the employers are effectively sitting them down and actually doing it for them, getting them set up and showing them how to register for my account. I think also there's probably a responsibility of somewhat maybe on Revenue next year to certainly educate employees about how to register for my account and to get them an awful lot more familiar, and that there should be some pushback to the employees to be responsible for their own my account and for sorting out their own tax credits.
Will there be any multilingual sort of aspect to?
That's been looked at as well, I think. That is something that's been looked at, because obviously we do have lots of different nationalities here now with us, so that is something that has been looked at, but it's difficult to cover all of them.
This is obviously somebody in relation to the question about will Thesaurus be made available on a Mac, so they're really just reiterating what Paul said. I use Mac hard drive simply split to use Windows and all Windows-based account software, so that's somebody that's already doing that in the same way that we do here. So if an employee starts at the start of the week, should we have their tax details by the Friday for payroll? So really it'll be instantaneous.
It'll be instantaneous,
With the new system in 2019, with the new system in 2019, will employers still need to leave old P45 employees who work casually a week, 1 month, perhaps 2 weeks, another month. At the moment, it is very labour intensive to use P46 and P45s each time.
Well, if you're using them on a continual basis, you know, even though it may only be 1 day a month or 1 week a month or once every 3 months, you don't have to P45 them if you're
That's really where the split in allowances comes in. You get your allowances split between, you know, any employments that you have.
P45 would really only need to issue once you're not intending to use that particular employee again.
Okay. There's still a lot, does there?
Okay, well, I think that we probably need to wrap it up at that stage because I'm sure Sinead has another meeting to go to.
We've gone through as many questions as we possibly could.
And we will try and get back to everybody.
I will, like there's a good few there, but I mean, certainly by close of business tomorrow, I will get back to anybody that we didn't get to answer today. So.
That would be great. Okay, listen, thank you very much, Sandra, for joining us, and for Sinead and Audrey, and for Rachel making sure things went well, and Karen. So hopefully we'll see you again at our next webinar, which we have a GDPR webinar on this Thursday. So just log or just go onto our website. You can see details of that, how to register. Okay, so thank you very much.
Thank you. Bye-bye.